your own taxes, filing your taxes on your own. Again, I'm a licensed CPA with just about 2 decades of experience. And in this video, I'm going to go step by step on how to file your own taxes in TurboTax. Now again, being a tax professional, I do strongly encourage you utilizing a tax professional. However, there are several instances and several circumstances where it might not make sense to use a tax professional and you can save a lot of money. So I figured I'd walk everybody through step by step on utilizing a national tax software. Now, TurboTax has been around for a while. They are probably the largest self-prep, as well as guided prep, as well as full-service preparation tax software that is on the market. And being the market leader, this would be the one that I would recommend, just as they seem to stand by their customers, offer support, and just overall have a user-friendly interface on their website. So again, this is really going to be for sakes of saving money. So hopefully you guys can follow this step by step. I would strongly recommend, if you got 2 monitors or you got a second computer, or you want to use your smartphone, log into TurboTax using one of those devices so you can follow along on my screen as well as on your device. So now before we start, you will need to have a TurboTax account. They will not let you start without that TurboTax account. And then again, I kind of want to just give the ins and outs and the intricates because, I know a lot of these tax organizations have gotten bad raps for not having clear pricing. And what a lot of them do, and including TurboTax, is they charge you based on your tax form. So the more tax forms you have, the more it's going to cost. And again, in order to qualify for the free, TurboTax is pretty easy to determine how you qualify for the free. If you scroll all the way down to the bottom, it pretty much tells you down here. So free simple return would be a W-2. Interest and dividends that are not requiring Schedule B, so that would be anything that's under $1,500. Standard deduction, earned income credit, child tax credit, student loan deductions, and taxable qualified retirement plans. So then again, some of the items that aren't included in that free return would be an itemized deductions, unemployment comp, business income, stock sales, income from rental property, credits, and deductions. So just kind of a hack is to go down the bottom of the screen, and TurboTax pretty much tells you clear as day as what will qualify for your free filing. Okay, so now let's kind of take a look, and let's look at your options. So, again, this is a do-it-yourself option screen. So basically how I got there is I clicked here and I clicked on do your own personal taxes, which again is, what I'd recommend if you're watching this video would be the best way to go about it, and you'd save the most amount of money. It would be the cheapest route. You can also have an expert do your taxes. Again, you can kind of weigh the pros and cons of, having a virtual expert do your taxes versus somebody locally on the ground. So you kind of determine that. But in this video, we're not really going to talk about that. We're going to talk about doing it yourself. So my suggestion would be clicking on Start for Free. And what you have to do is it's going to actually pop up here. And it's going to say, do your own taxes. You got 3 options: TurboTax, do your own, expert assist, and then full service. So full service is they'll do it for you. You upload your docs, they'll do it. Assisted is you can call in if you have questions or chat in if you have questions. But today we're just going to do it yourself. If you follow along my videos and you follow along, on my channel, we should have enough tax information so far in there that you'll be able to do it yourself, especially if you have more of a basic situation. Again, from this point on, I would say start for free. It's going to prompt you to log in. This is going to be the screen that it's going to pop up with. So again, if you don't have an account, you'll have to create an account. So you put your email address, create a user ID, create a password, put your phone number in. All these are required components. There's also IRS circulars or publications, I should say, that require them to collect it. They don't want to have return preparers utilizing TurboTax and disguising it as, a self-filed, which is not right, where the professional preparer should have an EFIN number, which allows them to put their firm name or their individual name on the electronically file. The IRS gives you permission to do it. So once you create your account, you put all your information in here. If you already have one, you can click sign in and sign into your account. Unfortunately, you need to sign in before you can do anything. So again, I kind of created a random account, and this is where we're at right here. So it's telling us what to expect. So we'll just click next on this screen saying got it. And so let's just kind of go through. So I want to maximize my deductions and credits. We'll say I donated to charity. We'll say I had a W-2 job. We won't say I'm a freelance or gig worker. So that's basically if you know, you got 1099 income where you do something that is outside the fact. You know, you earn a 1099, so essentially be Schedule C. We won't check if you're self-employed. Again, that's getting into a little bit more in the way of details. We're going to try to keep this somewhat simple, you know, for a more simple tax situation. We'll say we have unemployment income. We'll say we have children and dependents. We'll say we own our home, and that's it. We won't say we own investment property or cryptocurrency. Now, again, the good thing with TurboTax, and I'll show you once we get in here, is if you forget to check any of these boxes, you can always go back and update them as we go, and I can show you how to do that. There's definitely some shortcuts. Like I said, this software is very easy to navigate. So we'll click on Continue, and we're going to say comfortable on our own. Again, if you select one of these other items, if you need help, that would be as we remember before in the previous screen. So this is do it yourself, this is somebody helping you, and this is somebody doing it for you and signing the return. So we're going to do comfortable on our own. And then again, this is kind of giving us an estimate of about what it's going to be. It's telling us the state's going to be an additional $39, and right now it's on sale. One thing I do notice about TurboTax, and as well as some of the other main national preparing softwares, is that they use seasonal pricing, meaning early on in the season they typically have a lower price. As season progresses, that price typically goes up, and then as you get closer to the deadline, that price also continues to go up. So kind of just keep that in mind when you're doing your tax return. You know, just again on the pricing. And then again, kind of going down here, it's giving us other options to upgrade if you so chose to. So again, if you needed somebody to call, somebody to help, you can select this option, but I would leave this off and just go on ahead and do it yourself. So we'll click on the Start for Free button, and we'll select somebody filed for me, CPA or other individual. We'll select on that. And then it's going to start loading up our software. So as you can see here, you can tell what we're in. Right now we're in Deluxe, so this is going to be a paid version of TurboTax. You know, and it's giving us the estimated time to complete, which is saying it's about 31 minutes. So again, so navigating over here on this side here, so you have Tax Home, we have Documents, which again, there's no documents in here because we've not used this prior to filing any tax returns before in the past. So again, you can upload documents if you wanted them to do it. But again, we're just talking about strictly saving money, so we want to definitely save money. So we're going to now click on Start because I clicked back to Tax Home to navigate. So this is back to where our screen is. If we click on Tax Tools, we can click on Tools. So again, you can kind of search and see where your return is. And then again, there's some updates and upgrades within here. So we're just going to say Joe Smith. Oops, if I can type. Joe Smith is our name. We're going to say 0101. We'll say 1975. Oops, 1975 is our birth date, and we will say CPA. Social Security number, we're going to say, we'll just make one up, 2, 1, 3, 4, 5, 6, 7, 8, 9. And we'll click Continue. Again, this is just gathering basic information. State of residence, let's just pick District of Columbia. We'll select District of Columbia. And then, so here's just some items to kind of keep in mind. So if you're a member of the U.S. Armed Forces, now this is important because TurboTax does give discounts for members of the Armed Forces. Again, so if you check that and you have an active Department of Defense W-2, that's what it'll go off of, and you will end up getting a discount. So you want to make sure you click on that. If you lived in more than one state, you'd click here. So then it'd ask you again if you need to file in another state. And then if you can be claimed as a dependent. So again, if you're filing your own, if your parents claim you as a dependent, you want to make sure you click that box. That's very important. If you're preparing this return for a spouse or somebody that had passed away, you'd want to click that. And that's really it. If you're currently incarcerated, again, another one, but that's really it. Then we'll click on Continue. We will say that we're married. And we'll say we'll plan to file joint. Again, I made a video earlier about the differences between filing joint and separate, and it looks like TurboTax as well recommends filing joint. And then you only have to pay, you have to do one return as well. Do you have any dependents? We'll just say we have one. And then we'll click on continue. And then we'll say our spouse name is, I don't know, we'll just say Mike Smith. And then date of birth we'll say is 01/02/1975. Occupation we'll say housewife. I can type housewife and click continue. Her social security number we'll say 1, 2, 3, 4, 5, 6, 7, 8, 9. And click continue. And it doesn't like that, so we'll have to make it up. So we'll say 23, 76, 89, 76, 0. Click continue. Again, same for your spouse. If any of these items are true, you'd want to make sure you click on the box. Now, the other good thing is if you have any questions, so here's what I mean by being user-friendly. So you're like, what does this question mean? You'd want to click on this little question mark here, and it'll pop up. It'll tell you basically what it means from there. And then we'd click on continue. Did any of you make any money in other states? We'll say no. So again, this is if you made any money in another state. You would click on yes, we made money in states other than the District of Columbia. And the reason for this is because if you did make money in other states, even though you are a resident in Washington, D.C., you do still have to pay taxes in those other states depending upon where the income originated, and you could end up getting a tax credit in your home state for that income in another state. So again, it's just telling us what our filing status is, so we can click on continue. It's kind of nice that it's got the timer here and it's telling us it's going to take 31 minutes to complete. We want to add our address and our phone number. So we'll say 1800, we'll say 1600 Fake Street, and that is in Washington, District of Columbia, 90210. It's probably not going to like that. And then 489 777 777. I'll say that's our number. And then again, that's just saying let's double check your address. So that's now. And then again, here's our phone number, Fake Street, etc. And we'll continue from here. You kind of just make sure. And then, so now basically looking at this screen, so you can tell what's complete. So this is complete, this is complete, this one's complete. And then the dependent, it's saying it's going to estimate us 3 minutes. So again, we'll make this dependent. We'll say it's my child. If it's another person, so this would be like, if you're claiming a dependent for, like you take care of your mom only has Social Security income, and she lives with you, or you're taking care of somebody that's permanently disabled, you are still able to claim them as a dependent. So that would be another person, but typically it's going to be a child, so we're just going to select my child. Again, and then if you want specifics as far as what counts and what doesn't count, you may click on any of these items, but for the most part, a child that lives at home with you for more than 6 months out of the year, you provide more than half the support for, they are able to be considered a dependent. Again, we'll call this George Smith, and then date of birth, we'll say 01/03/2023. Keep in mind, too, so when your children reach the age of 17 during the year, the tax law as it stands right now is they will go from a $2,000 child tax credit to a $500 tax credit. So just keep that in mind. So we're going to say that this is our son. And then again, here, it's asking us questions. So pretty much what TurboTax does and any other tax software does is it specifically asks you questions in order to determine your eligibility. So this is what it's doing here. So again, these questions are important because this is what I had mentioned before, is that in order to be claimed as dependent, they have to live with you for more than half the year. They want to know if he was in the U.S. the whole time. And we're going to say that, yes, these are his legal parents. If you select different answers, it's going to ask you other probing questions as you continue through the return. And then again, now we're going through less common situations, and we're going to say that none of these apply. Adopted, foster child, and again, just want to make sure you read through these. Similar, the ones with a question mark, those you can click on and then something will pop up so that you're able to see what specifically is going on. But we're just going to go on ahead and click continue. And then again, we're going to say make up a social security number. Just put random digits in here. And we'll click on next. And now it's telling us that he qualifies as a dependent. So that's good news. So we'll continue. And again, if it says he doesn't qualify, it has to do with the questions that you asked, the way you answer the questions. So depending upon the way you answer the questions, it pretty much mirrors the IRS laws. So again, don't, if it says you don't qualify, it's because of the way the questions were answered. And if the questions were answered in that manner, you want to make sure that he does actually qualify as a dependent. Okay, so now we can see on this screen that everything is marked complete. So we're going to keep on going, and we're going to click on continue. And then again, we just need your okay on a couple of things. Let us use your tax information to prove your experience. It wants us to review and sign. We don't sell our tax information anywhere. And then share your data with Intuit. So it looks like it wants us to review and sign. We don't sell your personal information, so we will click on review and sign, and we will say Joe Smith, jointly with my spouse, I signed. Mike Smith, I don't remember what names I used, but we'll just say I agree. And we're good, review and sign. Joe Smith, Mike Smith. And again, you could say no thanks if you don't want to. We'll say no thanks. And then you basically opts out. So it's basically like a privacy policy that they have. All right, continuing on. So now again, they're trying to upsell you with stuff. And if you want it, I mean, by all means, but don't, sometimes people get caught up and they say, oh, well, I need it in the case I need audit representation and identity theft insurance and all this other stuff. Saying it's $125 value for $49. I would say don't add it. For the most part, chances are what I'm going through here is a pretty simple return. Odds of you getting audited and needing this is going to be slim to none. So let's just say don't add max. And then, okay, so now these are basically our situations here. So we already did the about me. We haven't done the income yet. We haven't done deductions and credits. So it wants to know our tax situation. So again, like I said, you can click here. So you can navigate through here. So these are all the items here on things that can be done. So about me, so they'll state my tax situation. Your income, you can go on ahead, and that's what we had indicated earlier on. All your income is here. If we miss something, you can add more income here or some other form that you received. And then deductions and credits, and then all the above down here. So that's standard deductions. And then any uncommon tax form. So we're just going to go on, click start. We're going to click on start. And here we go. Again, probing questions to see what our tax situation is for the year. So did Mike have any money from interest? We'll say, yes, we did. Receive any identity theft protection pen. So again, this is an IP theft protection pen that the IRS would typically send at the beginning of the year. So if you did not get this, just say, no, we did not. If you did get it, say yes. Did you have control of a foreign bank account? We'll say, no, we didn't. And we will continue. Here, so the 1095A. So be careful here with this question. This question is specifically, if you get insurance through your employer, they are required to send you a 1095. The only 1095 that's required to be reported on your tax return is a 1095A. The 1095A is insurance that you purchase on the marketplace. So if you remember the Affordable Care Act from back when Barack Obama was president, you're able to buy insurance on a marketplace, and that also put in a provision where insurance companies could not discriminate for pre-existing conditions. So if you do purchase insurance on the marketplace, you do have to put that in there, and you got to make sure you have the 1095A. If you do not put your 1095A in and you had one, your return will get rejected. So just make sure that if you did purchase insurance from the marketplace, that you add that in there. And the reason is that a lot of times you end up getting a subsidy that's paid in advance. So when you file your tax return, it will reconcile that subsidy. If you overpaid, you'll have to pay some back. If you didn't get enough, you will get a greater refund. So again, we're not going to add this one in. We're just going to say no. And again, here it's telling us right here, it's giving us a warning. If you select this, but one of these situations does apply, the IRS could reject your return. It will reject your return. It won't could. It will. So just make sure that you check that yes or no. This is an important one, and I had made a video before on common things that IRS rejects your return for, and this is definitely one of them. All right, so here we go. So again, now it's just kind of going step by step. Based on what we said before, it is taking us step by step through the process. So I'm just going to say start. We're just going to go through the process of it. We'll say work on Joe's W-2. And again, we'll make up a number. So 9 digits. I just want to make sure it was 9 digits. So you have two options here. You can actually upload it from your computer. So if you have a digital copy of your W-2, you can actually upload it and it'll fill in all the boxes for you. You can snap a picture with your phone if you're using a smartphone, if you're using the app, or even on the website. You're also able to do that, and it'll put the numbers in the boxes. If you do opt for one of these things, just make sure you double check each of the boxes that the information has been entered incorrectly, because sometimes it doesn't always carry and enter incorrectly. But for us, for our intents and purposes, I'm just going to say type it in myself. And then we're going to say employer name. We're going to say TurboTax. TurboTax. And then 123 Fake Street. And then enter the city. We'll say 90210 to show if anybody remembers. And then puts it in for you, Beverly Hills, California. And then again, we'll just click on continue. Okay, so now these boxes here exactly mirror your W-2. So box 1, wages and tips. Let's just say $100,000. We'll say our income withheld was $10,000. Social Security, wages and tips, we're just going to say it's the same amount. And then $100,000. We'll say it's the same. So again, let's make sure that it's right. Otherwise, it'll probably give us a warning if I put it in wrong, so I know what the rates are. So we're going to do $100,000 times 0.062. That's $6,200. I guess I could have figured that out on my own. And then this one should be, it's 1.2%. So it's going to be it's $1,200. Oops. 1,200. Get rid of that. If there's nothing here, don't put zeros. Just leave all these boxes blank if you don't have anything. Dependent care benefits, if you have this is the dependent care benefits flexible spending account. If you have it, you want to make sure that that gets put in there, but I'm not going to add that in there right now. Again, anything in box 12, all the codes are in there, and then that's what corresponds. So just more be concerned with the codes, because your W-2 will just say a code. It will not say the amount. And since all of our boxes are the same, we're going to say none of those apply. The most common one here is a retirement plan. Anything in box 14, you'd want to put it in there. This typically is if your state requires you to have like a disability insurance, paid family leave. Those are kind of the common ones that states require. Again, we're going to say we lived in the District of Columbia, and then we'll just make up an employer ID and put in your state wages and tips from box 16. Generally, it's the same amount as box 1 in your W-2, and then we're just going to cut our state withholdings in half. We'll say $5,000. If there's any local taxes, that'll be further on your boxes. So again, that's boxes 18 to 20. And you would enter that here as well as the local tax in there as well. Okay, so once we're satisfied, we're going to go on ahead and click continue. And now here's where you're going to want to read these questions. Odds are that any of these apply are probably pretty slim, but we just want to make sure that we skim them, make sure that everything is in there. So non-resident W-2, no, W-2 was corrected, didn't get a W-2. Unreported tips, paid family leave, non-qualified pension plan, non-taxable Medicaid waiver, worked outside the U.S., religious employment, inmate, or lived in a halfway house, employed by a foreign government. And we're going to say none of these. And then we're going to click on continue. As you can see, we're still doing pretty good on our timeline. We're going to click on done. We're going to say there's no more W-2s. We just have one. And then again, here's kind of telling us. So now our refund populated. And right now we're getting $4,000 refund. Just about $4,000 refund for federal. And $581 for the District of Columbia. So we are, as you can see here, we get a child tax credit and we are taking the standard deduction. So we're going to go on ahead and click on continue. All right. So now we did say initially that we had unemployment and paid family leave, so we can click on start this. Again, if we did this as an error, we can just say no, we didn't have it. And then we'll say no, we weren't required to pay back any unemployment benefits. So again, similar to the W-2, so I won't go through every single specific tax situation. Similar to the W-2, you would just enter the boxes exactly as they appear on that 1099-G that you received from your state if you did have unemployment. So now it's asking us about investments and savings. Again, all these questions that it's asking us is how we answered it at the beginning. So if some of these items don't apply, just make sure that you just go on ahead and click it and say, hey, it doesn't apply. So we would review it. So let's just say we had interest earned. So we're going to say yes, because that's the first item here. And we're going to click on yes. Again, you can link your financial statement, your financial accounts right here, and it'll import it in. Again, the one caution item that I have for you is just double check. You have to make sure you double check. Do not depend that your bank is going to input perfectly all of your information. And sometimes when you import items in, because I've had customers come to me and say, hey, I tried to do my own return on TurboTax, I imported it in, and I kept getting errors, and they just get so frustrated that they just pay someone to do it. So I always caution you, don't just assume it's going to be right. Make sure you check it. I always like to enter it in myself, but that's just me. So again, based on your personal preference, that'll be the way it is. So if you didn't want to enter it in yourself, you can select what you have. You do have to log in and link it to your account if that is what you are doing. I'm going to say enter a different way, and I'm just going to say we received interest. And then we'll scroll down and we'll click on continue. Similar to the W-2, you have multiple options. You can directly bring it over from your bank by logging into your bank account. You can upload it from your computer. If you have the 1099 INT, it will read it. And you can snap a photo with your smartphone if you have the paper copy of it. Again, if you use this option, you have to be logged in with your smartphone. I like the type it in yourself option, but that's just me. That way I know that it's right and it's done. And I know I've always encouraged this in all of my videos, limiting your touch points with the IRS. So if I type it in myself, I'm able to triple check it, type it in, triple check it to make sure that I did it correctly. So again, we can just say Bank of America, and we'll say it belongs to Joe. Total interest income, let's say we got $500 of interest income. And then again, it mirrors. So everything on your tax forms mirrors here. It's saying box 1, you just type it in. If you want to import it, just make sure you check it. That is, I know I can't emphasize that enough. Check, 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 always. Now again, it's asking about uncommon situations. Do any of these apply? And we're going to say no, none of these apply. All right. And then again, if you needed to add anything else, any other investments, you would add it here. So if you got more than one 1099 interest, you would add it here. If not, we're just going to click on confirm. And we said we had a dependent care credit. So we'll get started on this one. Again, here it's asking us probing questions based on IRS rules and regulations. Might be able to get you a big break on your taxes if you paid someone to take care of your dependent, so you could go to work or school. So again, I'll give you the rules on this. This is children under 13 in daycare. So a daycare program. So basically, if your child is not in kindergarten, is younger than kindergarten age, and they go to daycare, you can take that expense. If you pay for a private school for them to go to private school at kindergarten and up, that does not qualify as dependent care expenses. However, if you pay for somebody in the summertime or after school programs, so that you're able to continue your work, because say the kid gets out at 3 and you don't get out until 6, so those 3 hours you don't have care, you are able to take that deduction as long as they're 13, as long as they're under the age of 13. So keep that in mind as well, and we're just going to say yes. Tell us about Mike and Joe. So again, these are the husband and wife. I know I use 2 male names, but regardless, husband and wife. Any of these apply? We're going to say none of them. We're going to say neither of them were a full-time student. Or actually, we'll say Mike was, because I think it may give us an error because one spouse doesn't work. Number of month Mike's was a full-time student. We're just going to say 12. We'll say no. Whose care did you pay for? Again, it was this person, so that would be the child. You can read through the questions and see what it is, but again, I kind of just move through it. But again, depending upon how much did you pay for George's care in 2022. So let's just say we paid $7,000. Again, round numbers. If you paid money out of a flexible spending account, it has to make sure you have it included in your W-2, because the reason is that flexible spending account is tax-free money. So meaning you put that, you contributed in, it got taken out of your pay. So you just want to make sure that that gets included in so it gets properly calculated. Again, avoiding any touch points with the IRS is always what I suggest. So we're going to continue on. And we were eligible for a portion of the credit. Again, it's going to want the EIN number of the business name. So we're going to say child care and then EIN number. It's going to want, that's it. So we're just going to say 99123455. There. Oops, missed a digit. That's perfect. And then we'll say 123 Fake Street. And then do this. And then we'll say Fake City, District of Columbia. It's not a household employee, so a household employee would basically be somebody that lives in your house and works for you, which is not the case here. We're saying we sent them to a daycare center. Saying that our zip code does not match, so let's just call it then. We'll call it California because that's what that zip code is. And then city, we'll say Beverly Hills. Pay to the provider, we're going to say $7,000. So again, you want to just make sure that the right amounts are entered in here. Okay. Funds paid through childcare help you save money in your taxes. You may also want to consider a flexible. So I made a video on this before as well. So the flexible spending accounts are also helpful because again, it could help you lessen your tax burden. I mean, I know childcare expense is so expensive, and I always suggest it. I do it for myself and for my children as well. Again, if you had another childcare provider, you could add it here. But I could tell you that based on paying $7,000, you will max out on that credit at $1,200. And we're going to say no. So did you pay for any 2023 care in 2024? So these are questions, again, keep in mind that your tax return is based on the cash basis. So the cash basis is when you actually paid it. So if you pay for in the arrears, then you would want to say yes. But 9 times out of 10, you're going to pay in advance for your child care. We saved $600 on our credit, on our taxes this year for it. I'm going to click on continue. And then now again, we're going to go into some itemized deductions. So we'll start with the real estate taxes. And we're going to say yes because we did own our home. So you can also, if you have a vacation home or a land, you can also answer the question yes or no. We're going to say we paid $10,000 on our main home and nothing else. So again, this will come from a 1098 that you receive from your mortgage company if you have an escrow account that pays your real estate taxes. So you can pull it right off of there. A lot of towns and municipal websites actually put their tax payments online, so you can also look there as well if you don't have the record. So again, $10,000. This probably won't make a difference, so just so everybody knows is that real estate taxes are under with income taxes as well. So whatever you paid in for income taxes will count against this, in the cap for the itemized deductions on taxes paid to state and local taxing authorities is $10,000. Okay, again, we're going to go mortgage interest. So see, as I mentioned before, you'll see here, 1098, if you had a final closing statement, HUD, so if you close on your house in the current year, it's going to ask that. It's probably going to ask us about the value of your home. So again, we will not, again, as I said before, I'm not a fan of importing because I like to check and double check, and sometimes importing generates errors. So again, I like to just enter it in myself. Similar options to a W-2. In the 1099 interest, but we're just going to say type it in myself. If you wanted to do the import, you could. Again, we'll say Bank of America for our 1099, or I'm sorry, our 1098. We are going to click on continue. Do any of these uncommon situations apply? Someone who isn't my spouse owns this loan or a portion of it. The seller is financing this loan and we didn't receive a 1098. None of these apply. So I would say none of these apply. I mean, unless one of these items applies to you. but they are not typical situations. So again, for the most part, these items probably do not apply to you. So mortgage interest, we're going to say we're going to say it's $10,000. We'll just say it's the same amount as that we paid. Outstanding mortgage principal, this is actually on that 1098. So we're just going to say it's $300,000. Making up a number, we'll say 0101 for our origination date. We'll say 2022. The reason why I'd ask for that is that there is different caps. So depending upon your mortgage balance, if your mortgage was after the Tax Cuts and Jobs Act in 2017, effective in 2018, the limit is $750 on your primary residence. So if your mortgage balance was over $750, your mortgage interest amount will be limited. Prior to that date, it was $1 million. So if your mortgage is over $1 million, your amount that you can pay would be limited as well. We already entered our real estate taxes. So again, don't enter them twice because it's going to limit it anyways, and it's not going to make a difference. But I would just leave it blank, seeing we already entered it in the other form. They all end up flowing to the same place, so don't get yourself confused or caught up in the fact that it's asking you the question again. See how it says down here it's already been entered? Don't enter it again. And I wouldn't even go back and bother changing it in the last form. I would just leave it the way it is. And then this is a mortgage acquisition date. So if you used a mortgage broker and that mortgage broker sold it to Bank of America, this will be on box 11 of the form. So again, you just put anything in there that is on the specific form that you have in front of you. We'll say this is a property that I own. So if the loan isn't secured by a property, it's going to ask other questions, and it's probably not going to let you take the deduction. So again, it's all trying to get to the point for the IRS rules and get it on the correct line of your tax return. So we're going to say no in that one. I'm sorry, my primary home in that one. We'll click continue. And we're going to say we didn't pay any points. We'll say continue. We'll say yes. Is this the most recent one for you? Is this 1098 the most recent for your loan? We're going to say yes. And then we're going to continue asking to get some details about this loan. Neither of these. So again, if it's a HELOC, so home equity line of credit, if it's a refinance of a previous loan, it's going to ask other probing questions. So the reason why it's asking these questions is because, again, as I stated, IRS rules state it has to be on your primary residence. So if you had a HELOC, there's going to be different rates. If it was a refinance and you took cash out of the refinance and paid credit cards, technically the portion that you used to pay off credit cards would not be deductible. So just keep that in mind when you're selecting that. We'll say continue. Again, this is saying that it's complete, so we're just going to click on done. Now, if you had more than one 1098, you would add that in here as well. Okay, so now we're going to do donations to charity. We'll click on start. We're just going to say we gave money. We'll say, we'll say we donated clothes too. So we'll say yes. So what did you donate? Let's just say Goodwill. I feel like that is a common one. Let's say we donated money. We'll just say, if you have them guide you through it, it's going to basically just going to ask you for what items did you give. I just usually just say I'd value them. Donated items to Goodwill. Let's just say we donated on 12/31/2024. And we're just going to say it's household items. We'll click on continue. Obviously, if it's any of the down below, if you report a car or a boat that you donated, certain items you're actually going to need an appraisal. If it's over $5,000, you need an appraisal. So you just kind of keep that in mind. We're just going to say various household goods. We'll say the value was just say $5,000. Or it won't say $5,000. We'll say the value is $1,000. And I usually just do thrift market value, and we'll say done with this donation. Purchase price, I would say it's $7,000. So again, you got to be reasonable. So the thrift shop values of things are very low. So I usually say take a small fraction, like take 10% or less of what you paid for it. Again, and then so to enter various, I always enter various because you're not going to remember. So actually, I probably put this up to $10,000, say the value of it was. I'm just going to put various because we don't know the dates. Acquired, purchase, it's pretty much the standard. We'll say yes. This is asking us if we owned it more than a year. We'll say yes. And then if you want to add another donation, we can do cash. So we gave a one-time payment of, say, $1,000 of cash to the same organization. And we'll just say done. And now the total amount that's going to the organization is $2,000. And we'll click on continue. We'll click continue. And we'll say 123 Fake Street, Beverly Hills, California, 90210. And we'll hit continue. We want to double check some details to make sure we capture everything about your donated items. Check on any of the following that apply. I retain partial ownership. I attach conditions. So again, typically none of these items are actually going to end up applying to your tax situation. So I would just click on none of the above. All right. So now everything that way that we answered everything is done. We went through all the questions. We went through everything. So now let's just say we missed something. So you're like, I missed something. Maybe you want to click on add income. Let's skim through. Make sure that I didn't get any of these other items. I don't have any of these other things that apply. HSA is another good one. Like if you have an HSA contribution and you took a distribution from your account, you want to make sure that that's reflective in here as well. So kind of skim through these and make sure nothing else applies. If nothing else applies, similar with deductions and credits, I'd skim through these and it's telling us to review these, but we'll go back and review them. It'll prompt us to go back and review it. So we're going to take another look at our income. Again, it's asking us if we took a disaster distribution for a disaster that occurred. We're going to say no. And a digital asset, so this is cryptocurrency. So if you had cryptocurrency, you would answer this yes, but we're just going to say no. And then it's saying everything looks good. So we're just going to continue going. We can maximize your refunds with deductions. And then let's say, we can say, help me decide. How much did you pay for property taxes? More than $5,000. We're not going to say we paid a registration fee because that doesn't do anything. And then we're going to say, this is what we put in there. No money on medical expenses. Medical expenses is something that typically doesn't come up. So that has to exceed your AGI by 7.5%. So just assuming in this case it was $100,000, we'd have to spend $7,500 before we'd start getting a deduction. So at $7,501, we'd get $1 if we itemize. And then so on and so forth. So again, that's why that's asking questions. And those has to be unreimbursed. So it can't be reimbursed by your insurance company. And then now again, it's comparing the two. So it's comparing standard versus itemized. It's seeing which one makes more sense. It'll probably come up with an analysis and say, if you take your standard, it's this. If you take that, it's that. Now again, here we go. They're trying to sell us. So again, this is where it kind of comes to be diligent in what you want to do. I think we're good. And, I'm going to just say we're continuing. We're not going to upgrade. There's no need to upgrade for an expert final review. I mean, they're not going to necessarily know your tax situation. Without physically like seeing all your tax forms and whatnot. I would always say just review it on your own. And then again, they're just telling you if you change your mind. But again, continue on. All right, so we're going to go back to the child and dependent credits as it's requesting us to do. And we're going to click on continue. They want to make sure none of these reply. So the 8862, this is basically that you got disallowed from taking a earned income credit or child independent credit in a prior year, and now you have to fill out that form. And we're just going to say none of these apply. And that's what it's saying here. So if I click on this, that's what it's going to tell you. So the IRS basically sent it saying that you weren't allowed to take that credit, and you're typically suspended for 2 to 3 years. So once those years are up, you are able to retake the credit, but then you have to fill out the form. So we're not going to do anything with that. We're just going to say none of these apply. And then that's working on our child tax credit. And we're just going to say done. And now we'll check out our deduction type. So here's where it's comparing. So based on what I entered, our itemized deductions would be $22,000. Standard deduction would be $29,200. So Obviously, we're just going to go with the standard deduction as it's a $4,500 difference over the itemized deduction. So if for whatever reason you wanted to go itemized and you wanted to change your refund, by all means do it, but for sure it would not be recommended. So now we're just going to click on continue, and we're pretty much all done. Now, again, I mean, if there's anything else that you want, if there's any deductions and credits that you feel like, hey, I want to see if I missed something, you can kind of go back through here and just skim them and just see, is there anything else in here that I might have missed, that I want to go and fill out and see if I can get it. Now, just keep in mind that we pretty much got you credits. There's not really any other credits. The only thing you're going to maybe get is additional deductions, but there's not really any additional deductions either that you can get. And even if there was, you would have to contribute another $4,500 to exceed that standard deduction before those itemized credits would even make any sense or have a bigger advantage over taking the standard deduction. So again, I would just say stick where we are, and let's kind of go through here. It's going to go, we're going to say continue. Home buyer credit, 2008, did you have that? We're going to say no. And then now it's still telling us everything looks good. Again, I'm just going to follow their prompts. I'm going to keep kind of going through it. We're going to click on start. We're going to go through our tax situations. Again, that's just, bunch of screens. Let's go through the federal review. This is all the information we entered early on, our fake social security numbers and all that. And then again, it's going to check my info. So now here's another selling point too of where they try to get you. Right here. So there's one item that needs our review, and they'll say you have to call in for an expert. So you just kind of want to be a little bit diligent and try to fix the error yourself and actually read into it. And let's see if we can do it here. Let's see if we're able to do it here. We'll review it. Because it's saying Washington, D.C. So let's just change it to an actual Washington, D.C. zip code. Instead of going back and changing everything else, because this probably wouldn't pop up, but what it's saying is that the zip code doesn't agree to the actual zip code of the state that you typed in. So I literally just Googled Washington, D.C. zip code, and we're going to put that in 20001. And so again, so you can kind of see there, so what I can say, a valid zip code. The zip code is not valid because it was entered as that. So I'm going to put it back up here too. Let's see if we can clear it. And then, so again, that's saying that Washington, D.C. We'll click continue, and we did it. So now if this was something that was not easily to be cleared, which is, like I said, a lot of times your issue comes out is when you import things. That's why I strongly suggest not to import your tax forms. Just type them in. We'll click on continue and see what's happening here. Do you want to get your refund early? Again, here's some AI stuff that looks like it. It's giving us a summary of what our refund is and where it came from. So we got $2,000 child tax credit. We got a $600 dependent care credit. And then again, we had $10,000 withholdings, and that's where we came up with our 4505 credit. So again, this is AI that's telling that. And then if you click on get a detailed review of your numbers, this is a summary. So again, you can kind of go back and check your tax forms based off this summary. I think that's a good idea just to verify, especially in this case, just kind of check to make sure. So we know it's right because we had a $100,000 W-2. We had $500,000 of interest, which goes there. That's the standard deduction. And then obviously blended tax rate is basically just your effective rate. These are taxes paid. These are the credits that we talked about before. And then that's kind of just a summary. There is a spot here if you want to... I thought there was a way. Oh, view tax summary. Again, that's similar, so you can always kind of tell. And I thought there was another way to see. Let's see. Share with my agent. Preview my 1040. This is important too, so you can kind of see all the information in here of previewing it. Again, your dependents. So he gets the child tax credit. Kind of keep scrolling through. Here's $100,000 of wages, so you'd want to make sure you check that and just kind of check it's your W-2s. If you have two of them, just add them up. Interest, again, make sure you add that up. If you had dividends, they'd go here. You can kind of just read the lines, and then you'd make sure that you got everything that you needed and that it's entered in actually accurately. The other big area that I always like to check on is our withholdings. So We're going to scroll down to keep scrolling down to our withholdings, which is here, federal income tax withheld, forms W-2. Especially if you have more than one, add them up and make sure that this amount agrees to what you have in your W-2s. So if it does, then we should be good. And then that's pretty much all that there is. And we're going to click on back. And we're just going to say we don't want a refund early because we're just going to get it direct deposited. Honestly, the IRS doesn't open until 1/27. And based on our tax situation here, there's not really anything that's going to hold it up. So there's no need for us to pay interest or anything like that or a fee to get our refund early. So we're not doing that. We're just going to have it put into an account. And then state taxes, it'll bring over all your federal information to fill out your state tax return. And again, I'm not going to go in great detail on this. I'm probably just going to skip over all of these screens in our federal tax returns. I'm sorry, in the state tax returns. Because again, every state is different, and you just have to go through and answer all the questions. I'm just going to continue, leave the pre-filled questions and say none. We had health insurance, so that's an important one because a lot of states, if you don't have health insurance, will actually charge you a penalty. So make sure you answer that right. I'm just going to say done. We're not going to answer any of these questions. Now, obviously, if any of these apply to you, you would want to go back and answer them. Not doing any of this. We're just going to scroll through it. We're saying no, continue. No taxes paid to another state. If you did have taxes paid to another state, so that's where you have income in another state, then you would put that in there. Continue on. We don't want to apply any to our overpayment estimate. We don't want any of this. We're just going to continue through these. We're saying no. We don't need to do an extension because we're filing it plenty of time. We're going to say no. We're going to say no. And then done. Now it's ready to review our state return. So great. So our state return's good as well. And we're going to continue. And again, here's our refund. And it's going to do them together. So I want to get my $5,000 refund filing federal and state together. So you usually want to file them both together because you run into an issue if you file them separately. You won't end up, you won't be able to go back and do it, and it makes it just a pain. So I just say file your state together if your state does have an income tax. It's going to do one more check of our return. We'll let that go. And there are no errors. And we don't need to do a recap. We've already done the recap, so we're just going to say, okay, well, we will go through the recap. So it's telling us we got 2,600. So again, this is all stuff that we pretty much just went over prior to. And state taxes are done as well. Again, just a brief summary. Let it think, do its thing. And 44 minutes. So obviously I talked a little bit, but they were about 15 minutes off roughly from their estimated time. But that's not terrible, you know. I mean, I think their estimated time was a little bit low, so I think hopefully you're able to do it within the time. But still, I mean, I believe that somebody, you know, not as familiar with taxes and not as familiar with the system and answering of the questions, it'll probably end up taking you, I would say, set aside about 2 hours to do your return. And we're going to click on Finish My Return. And again, sometimes you want to do your return. A lot of times I say, so again, reinforcing the touches with the IRS. Sometimes you want to do your return one night. Put everything in, get everything in, do it, sit on it, you know, and then go back the next day and check it. Do what I did over here, tools, check everything over, look everything over, go back, review your documents, review everything else, and just make sure that you got everything is inclusive in that return. So again, I'm not going to add max. I'm just going to, you know, because like I said before, odds are that you're going to need it are going to be slim to none unless you have a complicated tax situation or you're doing you have aggressive tax positions. I probably wouldn't do it just because, like I said, you just have a W-2. Everything is verifiable information. You're not taking anything out of the ordinary. Child tax credit is legitimate. Dependent care expense credit is legitimate. So as long as you're not taking an aggressive tax position, I would not even worry about it, and I wouldn't even bother with it. But again, that's just my own kind of input to you. So finally, this is where we get to know how much it's going to cost us to do our return. So TurboTax, so if you never file your returns, one thing to keep in mind too is if you never file your return with TurboTax, you will not pay for it. So you can go through and do your whole return and then not pay for it. You can say, oh, well, wait a minute, they're going to charge me a ton of money. so I'm not going to pay for it. But honestly, I mean, $78, I mean, to do your tax return, I mean, that's a pretty good amount of money. I mean, you'd probably, if you were to have them do it, would probably be double that. If you were to get a CPA or local CPA or enrolled agent, would probably still be a little bit more than double that. You're probably looking 2 to 3 for a smaller, and potentially even more if you go to a larger firm. So this is definitely like a huge savings for you. I also would encourage not to pay with your refund, because they end up charging you a fee if you pay with your refund. So my suggestion is not to pay with your refund. So again, seeing terms apply. I just wouldn't do it. I would just pay with a credit card, do that. It's probably the easiest way. You can do Apple Pay too if you want. Pay for it, go through it. I'm not gonna go back through. And then for whatever reason you had a service code, you had a discount from somewhere, you can enter that down here. But if you don't, you would just confirm payment, and then you would go through and then go follow the other couple of steps, entering your bank account information for direct deposit, which is the best method, and then signing your return and then clicking on e-file. So overall, hopefully this was a long video, but hopefully everybody found this video helpful. And if you did, please like, subscribe, and share the video. And thank you for your support of the channel. If you have any questions or comments, feel free to leave them down in the comments. Happy to go over any other specific questions in a video of how to deduct something, or if you're eligible for something. But thanks again for tuning in.